that we get from all this?
Welcome back. You got the market, which is up 140 points, 25,000. Let's round it off. It is at 25,000. Rajesh Kothari is with us, Managing Director at AlfAccurate Advisors. And this is Rajesh's kind of market, very, very stock specific. And for the discerning investor. Rajesh, good afternoon. Good to have you back.
Good afternoon.
So since the last time we spoke, Rajesh, tell us a little bit about what has been on your radar? What have you done? Stocks have all come back in a powerful way. Tell us.
I think, like last time we discussed at length that, whenever there is uncertainty, that's the time correction happens. And whenever such correction happens, take it with two hands. Don't worry too much about macros because macros keep changing. And you have seen, in fact, the good things, whatever has been happening in last 3-4 months in Indian economy in specific, I think are getting ignored because of Donald Trump tariff tantrum and of course India-Pakistan. These two things actually grabbed the headlines, and all the good things which was happening simultaneously in the economy, they were actually not talked about. So inflation is coming down, interest rates are coming down, RBI is taking all the necessary steps to improve the liquidity in the system. I think everybody forgot Finance Minister gift, the tax cut, which will likely to boost consumption from second half onwards. And all these things put together, simultaneously there is some time correction and there is some price correction, making valuation kind of a reasonable. Of course, it is not cheap, but at the same time, it is not too expensive. And that's, I think, a very good setup for the market to do well over next 12, 18, 24 months. One important thing from the result season, if you look at the BSE 500, I think except probably 40, 50 companies, most companies have announced their results. And the results have been quite satisfactory. The EBITDA growth is now double digit in the fourth quarter. If you exclude the oil and gas and metals, because that's the right way to look at it, to compare the underlying strength of economy. And that is 13, 14, 15%. And I think that's a very, very, very good number. As we move into 1Q and then more importantly from second quarter, I think the nifty earnings growth will also turn double digit because of the base effect, number one, and number two, overall improvement in economy. So net, I think the market looks reasonably good. And if anybody who has a 2-3 years view, I think it is a good, decent money to be made in the market.
Rajesh, that's the top-down outlook on India and India's macros. What about individual ideas? What is it that you like? And incrementally, have any new trends emerged, say in the last 1 or 2 months, say from the earnings, any interesting ideas that have propped up that you're investing in?
Well, what typically we do is that we a little bit try to do 6 months ahead of time, correct? So whatever numbers now getting announced, which are good, probably that's what we have been looking for from last 6-8 months. And today, if you ask me what we are looking for is that where do we see the incremental growth 6 months down the line, correct? Like for example, if you remember last 18-24 months, we have been talking about capital goods companies. We have been talking about a power grid capex. We have been talking about a capex into the HVDC technology. And look at the 2-3 companies. There are only 2 companies in this HVDC space. And of course, one company what we own is Hitachi Energy. Please put a disclaimer. And this company, look at the order book, look at their execution, look at the revenue growth. It has been a super duper kind of numbers. So now what we need to look at is incrementally from here, how do we see the new trends emerging in the sectors?
So tell us about that.
2-3 quarters for those companies to get reflected, but that's where you make a bigger alpha. As far as management commentary goes, I think across various sectors, there are winners and there are losers, and I can go on and on, but I think there are a few winners in the capital goods space, which we continue to like. I already talked about 1 or 2 names. Same thing is probably going to happen in the consumer space, where right now it's a little bit slow, but as we move into September quarter, you will see consumer trends also to improve, particularly on the discretionary side. And we hold here one or two very large companies in the consumer discretionary space. And same thing, I believe, is going to happen in pharma, because currently people are a little bit skeptical, too much of noise on US tariff. But as and when that noise gets over, I think the pharma will again probably come back because the growth is going to be very strong in a few pockets within pharma, not the entire pharma space, but the few pockets within pharma.
Okay. So pharma is something that you're looking at. Rajesh, hi, good to have you on.
Hi.
I must talk to you about defense, right? Because the last couple of months, especially the last, 6, 7 odd weeks for obvious reasons, the sector has definitely come back on the limelight in a big way. Today we were talking to BEML and, that stock also, they're looking at building up the defense exposure. We know that. Stock's up 12 to 13% right now. But what is your assessment and your approach? Given the huge run-up in stock prices, the question is, yes, the order book opportunity could be good, but is it all substantially already captured in the stock price, or can someone still take a 2-3 year view and hope to make money here?
Well, frankly speaking, if you ask me, then it is a part of my stocks missed in last 3 months. That's what figures, because that figures are because we have not adequate exposure to this entire space in general. But I think what we look forward is the more sustainable kind of a thing, rather than narratives. Ultimately, what we need to look at the numbers. And that's why there is always a gap between, narratives and numbers. And as you rightly say, what the valuations are already factored into. So we have very selective exposure to 1 or 2 names within this entire defense theme. But, no regrets if you ask me, because we are holding few companies which have a much stronger visibility compared to defense and much stronger business moat compared to defense. And of course, the best of the customers, no working capital issues and no receivable issues, unlike many defense companies. Please understand, the defense, it takes 10, 12 years for any approval, So
absolutely. It's a long gestation period, can be lumpy, absolutely. So let me ask you to play the manufacturing theme, engineering or manufacturing, or basically, the whole Capex cycle theme. If not defense, how else? What are the micro sectors or the sub-pockets? How are you playing it?
So one category is HVDC technology, and we've been talking for that for last almost 2 years. The name of company, what we own, Hitachi Energy, is one of our largest holding in that. The second space to look for is the pump segment. Now, for example, the nuclear power is going to be a very big opportunity. And there is only probably, I think, in my view, there is only one company which is an approval to supply the nuclear power plant. It's a multinational company. We like that space. Very good company, debt-free balance sheet. So that's second category. Third category is the compressors. And as the capex goes up across the various subsegments, be it a mining, be it a defense, be it a steel, or across various subcategories, the compressor category also can do significantly better. And the fourth space is the EMS space. And this entire manufacturing, be it a Apple doing outsourcing or Vivo is doing outsourcing, whichever name you want to talk about, the overall EMS space will also get tremendous benefit out of this. So these are the 3-4 sub-pockets within the CapEx theme on which we are bullish on from quite some time.
Rajesh, with full disclosure, why don't you tell us those 3-4 those names specifically? Full disclosure, just to for our viewers, if you're comfortable.
Yeah. So in pumps we own KSP Pumps. That's the company what we own. In compressor we like Kirloskar Pneumatic, and EMS space we own 2-3 names, all market leaders companies, starting from Dixon to even Avalon and Sirmas of the world. So that's basically the overall capex theme. But kindly please put disclaimer. I repeat, we own these companies for our clients, across the PMS plants.
No, absolutely, and I think it's a absolutely clear disclaimer, no doubt about it. The nuclear one that you were talking about, MNC company, which one was that?
There's a company called KSP Pumps.
Okay.
Yeah, KSP Pump. This is a company which is a German subsidiary and one of the largest company in KSP. I think the third largest in the pump category, and very high-end technology. That's their moat. So they don't do too much of solar pump and all that stuff, but they do more of a critical technology where technology and applications are getting more.
Rajesh, you also spoke about 1 or 2 large consumer discretionary plays and how pharma may make a comeback. What would your stock holdings be with the disclosure?
So in consumer discretionary space, we own Trent. Trent has been our largest holding from last 3.5-4 years. And I think the company is doing exceedingly well in terms of even the quarterly results. If you look at it, I think that they have done extremely well compared to any other retail category, or forget retail, even the FMCG, non-FMCG, discretionary. If you put the entire growth, then it's the fastest growing company in that entire universe. So that's one company what we continue to like. And there are another 2-3 companies which we are still adding to our portfolio. So I would not like to disclose at this point of time. But it's an interesting discretionary spend on which we are playing. because we believe that the tax gift will boost the consumption from second half onwards, and that can lead to improvement in the overall discretionary space.
All right, Rajesh, we'll leave it there. Thank you very much for joining us. It's a pleasure and good conversation. Actually,
Thank
great
you.
conversation, as always. Thank you. Well, I think we're up.